Ophelia, 21 shares. You're partnering with Kathy for the Bitcoin application. A lot of the old school wirehouses and wealth management platforms have not been allowing access to these Bitcoin products. I believe UBS, for example, is not allowing their advisors to buy spot Bitcoin ETFs. Is a spot Bitcoin ETF more likely to broaden the institutional participation? That seems to be the game, but I'm not sure that's going to happen necessarily. Your thoughts?
The short answer is yes. These are wrappers people understand. They're used to them. They fit within their existing infrastructure. And I think that's a really important piece. I think futures product, well, they certainly have a place in the market, have typically been viewed as more complex in some respects. And so I think there's been a little bit more hesitancy there. These are a bit more plain vanilla, or at least just as plain vanilla as they can get while still being in crypto. And I think that makes this a little bit easier. I think it also removes, assuming these things do move forward and get approved, it removes some of the regulatory uncertainty around these products. Because at the end of the day, the role of advisors is to manage their clients' money and provide them with access to high quality product. And I think, taking some of that regulatory uncertainty out of the mix can certainly improve accessibility.
Yeah, and you and Kathy are also launching recently a suite of Bitcoin and Ethereum futures ETFs as well, right?
Yes, that's correct.
All right, Kathy, let's go ahead. Do you want to say something?
No, we think there's actually certainly room for both. And I think that might be where this ends up. I think we're going to end up seeing both types of products with different use cases for different user bases. And I think that's a big part of at least our ethos has always been to, meet customers where they're at in their crypto journey. So having that combination of both futures and spot product really puts us in a position to do that.
And do you think there's a customer for each one? Is there a reason someone might want a futures? And Jan, jump in, any one of you, but I'll ask you, Ophelia, why a customer want a futures product versus a spot product necessarily?
There's a variety of different reasons why that might be the case. I think spot products have a tendency to be a little simpler and have a more broad-based appeal, and that goes to your first question around why we think this is really a broadening moment in terms of access. But futures products also certainly have a role, and you see that in other commodity markets as well, especially around having significant liquidity, potentially more sophisticated strategies that are interested in using futures.
Kathy, so let's assume the SEC approves the application this week or whatever. What kind of impact would a Bitcoin ETF have on Bitcoin? I mean, we all saw this big run up. The minute BlackRock announced they were interested, it was 30,000, and then it went, now it's over 40,000. They can't help but think this is logically in anticipation of a spot Bitcoin ETF. So is this a sell on the news event or not?
I think a lot of people have been saying that it probably will be a sell on the news event, but so many people are saying that now that I'm beginning to have doubts. We are seeing an anticipatory move, but the move of institutions into this new asset class, and that is what we are talking about here, a new asset class, which with another diversifier, institutions can increase their returns per unit of risk because of the low correlations. I think that's going to be very appealing. And if institutions with trillions of dollars under management just put 0.2 or 0.5% in, that could really move the needle. So we think the move has been anticipatory, and it makes sense. It makes sense. There's a scarcity value now evolving. It's becoming a scarce asset at 19.5 million Bitcoin outstanding. It can only go to 21, and 15 million of those 19.5 million are in what we would call strong hands. They haven't moved their Bitcoin in the last 155 days.
Jan, you're an old hand at this. There's a thing we call the S&P inclusion effect. When a stock is announced going in the S&P, it runs up, going up to that. This happened with Uber just a little while ago, and it happened in a very big way with Elon Musk and with Tesla. And you can't help but think there is such a thing as an inclusion effect. If all of a sudden there's a lot of people are anticipated buying a product, whether it's going into the S&P or whether it's becoming a Bitcoin ETF product, the product runs up. What happened was perfectly rational. So just riff on what Kathy was saying.
Yeah, no, I mean, listen, I think Kathy's right that there is a short-term positioning in front of this approval, but what people are missing is just take a step back. And you're in a great setup, I think, for investors who are going long Bitcoin. Number one, the Fed has stopped raising interest rates. So as a store of value, it and gold should benefit from that general positioning. And then for Bitcoin itself, the halvening, which is happening in April, has always technically been a positive for Bitcoin. So I think this is a big price impact event, but I also think there's these other trends that are happening too that are positive for Bitcoin. So
I remember when Bitcoin futures were launched in October of 2021. They made quite a splash right at the time. The volumes were huge. Remember BITO? We had them on. There was huge volume at that time. I mean, that was a real liquidity event.
That's right.
And I think that was a real, Doug, weigh in on this. So what kind of reception do you think the spot Bitcoin ETF is going to have? Is it going to be different?
You bring up the futures Bitcoin ETFs. I mean, they were the first time that investors had access via the ETF lens, right? And an ETF we can all access here at the New York Stock Exchange through our brokerage accounts. Ultimately, that's what we're looking at when we think about ETFs. ETFs provide democratized access to all these different investment vehicles, investment styles, and they do it all with ease. What we're talking about today is the potential to now bring spot Bitcoin accessibility to individual investors, institutional investors, investors who may not feel comfortable investing outside of an exchange through a wallet or some other feature. And so the idea that you have a regulated investment vehicle like we have in the futures-based Bitcoin ETFs becomes exciting, and it's why we're gearing up here at the New York Stock Exchange to be ready to trade all the different vehicles that may come to market here in the next week.
I think the day one, to answer your question, Bob, will be a big thing, but I think also it's going to be a process. The whole book will not be written on day one because there are a lot of investors that have been contacting us. Just how do we think about allocating to Bitcoin? And we're talking about financial advisors, fiduciaries, institutions that just, to Doug's point, did not want the Bitcoin futures ETF. They really wanted a spot Bitcoin product, and so there are a lot of conversations that are going to happen. So I think it's going to take a while.
Yeah. Kathy, you recently sold some Coinbase stock. I mean, we usually consider Coinbase a proxy for Bitcoin. What's your thoughts on Bitcoin now? And we sort of just ignored the larger philosophical issues about, for the broader investing community, whether this really is an asset class at all. And does it have a significant use case, for example, something you would think of as a normal asset?
My starting point, Bob, just to butt in there
We're
is...
talking to a big bull here, okay, and Jan Van Eck, everybody.
Look, we've been doing gold since 1968. Some investors just don't care about store of value investing. But if you do, my point is that Bitcoin is a complement to gold. And there have been other complements to gold, silver, platinum, palladium over the decades. So this is just a complement. So start there and thinking about where to put it in your portfolio.
Kathy or Ophelia, go ahead. Either one of you. I'm going to weigh in on that. Use cases, broadening out.
I'll give props to 21 Shares, where they have launched 40 different products, actually now 45 with the new funds here in the U.S., and are enjoying economies of scale that we think this spot Bitcoin ETF is only going to increase. And so this is going to enable us to serve institutions. And we do think that institutions are missing this asset class. It's been evolving for the past 10 plus years. And they've had a lot of time to study it. We've certainly put research out there. 21 Shares has, all of us have. And I do believe, and stay tuned for our big ideas, but this idea that it is a new asset class will come clearly through as you see the correlation of Bitcoin to other asset classes out there. Sorry, Ophelia.
Go ahead. Ophelia, you want to weigh in?
Ultimately, this is a new form of technology, right? Not just a new asset class. So you can't really split those two pieces apart. And I think that's important here because I think, yes, over time, you'll start to see things like Bitcoin act more like that store of value. But right now, actually, at a technology level, it's still groundbreaking. And, there's a lot of discussions around what blockchains mean in terms of their relationship with AI, what blockchains mean in terms of their relationship with global payments networks and monetary policy. This is still all quite groundbreaking. And if you look at, where we are in terms of the adoption cycle, you can think of crypto and blockchain being roughly in the mid to late 90s in terms of where the internet was at the time. So there's still quite a ways to go in terms of how this actually will interact both with the world at large and sort of our economic systems, as well as, quite frankly, how it will end up interacting with your portfolio. And so while, yes, it has certain characteristics of a store of value at this stage, it's also very much part of a new wave of disruptive technology. And that really can't be underestimated.
Go ahead,
so Bob,
Kathy.
I was just going to leverage off that and basically say that if you think about the internet early 1990s, what happened? The developers did not build in anything to enable financial services because they never thought it would be possible. This is simply completing that. And we think that the efficiencies coming out of building that layer into the internet are going to be profound.
Yeah, you and I have had this discussion a long time. I am not convinced this is a completely new asset class in the way we traditionally think of asset classes: stocks, bonds, cash, commodities, real estate. But I am convinced Bitcoin as an ETF structure is a far safer way for people to own it than the current structure exists, where we have all sorts of disasters, people forgetting their passwords, stuff getting stolen. So I am convinced Bitcoin is a safer way to own it, despite my concerns about whether it's a real asset class. And I remember what happened with gold. Now, gold has been money for thousands of years, and it has satisfied use cases clearly. In fact, it's used in jewelry. It's used for industrial purposes. Gold has clear use cases historically. And I saw what it did, the gold ETF did. You were involved in that. 2004 that happened. I was very involved trading it. We covered it the day it happened down here. And I remember how important it was because gold used to be like old guys in their basement holding gold coins. And all of a sudden, you didn't need to have that problem. You had a custodian in London that had a gold. I saw the vaults in London. It is eye-popping. I saw the gold vaults. And you wow. There's guards everywhere. They don't divulge where it is. It's safe. You could trade it on an intraday basis, and you don't have to worry somebody breaks into your basement. So this is why I think it works well for a Bitcoin ETF. I remember what happened to gold. I'm reminiscing with Jan here. It was like $400 in 2004. It went to $1,000 in a few years.
Yeah. Listen, I think it's very exciting for Bitcoin, this development. Gold, just to put in memory, when we launched our first gold mining ETF in 1968, it was illegal to own gold.
Yeah.
Then in the 70s, they liberated the price. The only way you could buy gold is through futures contracts. Everyone had the Series 3. And then absolutely the ETF, the bullion ETF, was a breakthrough in accessibility and cost for investors. That's one thing too, the spreads. Yeah. We were expecting, if they're anything like we see in Europe, will be much tighter than you can necessarily get on a crypto exchange. So I think it's really exciting.
And Doug, of course, you pay for this. I'm talking about custodians. It's very important to have a custodian and not, you're putting gold in your basement or Bitcoin.
That's exactly right. I mean, what we're
talking
about
and you pay for that, though. But
you do. But what you were talking about here is taking Bitcoin and putting it into a regulated investment vehicle, right? And so there's a certain amount of investors that are looking for an ETF that's traded specifically on an exchange. It gives you access. It gives you a vehicle you're comfortable with. Maybe it meets the mandates or rules of an institution. At the end of the day, though, it also brings other investors that have new and innovative ideas back into the marketplace. And we saw that as Jan mentioned with gold, all these combination complex vehicles, people trading gold in different ways. We're already starting to see it in the filings with new and unique, interesting filings coming along, taking pieces of Bitcoin, taking pieces of some of these ETFs. So the future is exciting.
I can smell the press releases coming in the next few months from the New York Stock Exchange. While I have you here, one of the developments that appears to have helped spot Bitcoin ETFs is the development of these surveillance sharing agreements proposed by the exchanges. Doug, briefly, without getting too wonky on us, explain how these agreements work. And this was a big point about selling this, how they can detect or address fraud and manipulation.
Yeah, it was a big point.
Market.
I mean,
this was the thing Gary Gensler really had a problem with.
That's right. When ETFs list at the New York Stock Exchange and their underlying holdings trade elsewhere, the exchanges will set up these surveillance sharing agreements where regulatory departments will share data and will exchange data.
What does that mean? It sounds very fancy, but what actually happens? And
imagine
how does
you
this
have
help people protect
imagine
people.
you have an international ETF that's holding, it's listed and traded here at the New York Stock Exchange, but it's holding securities that are listed on the London stock market, the LSE. It allows the London stock market, these agreements, to share their data with our reg department to look for any fraudulent activity, any manipulation of share prices. And it sort of opens up the pathway for regulators to speak with one another. Now, in this case, there was a lot of conversation about these surveillance sharing agreements along the way. At the end of the day, that's sort of fallen out of the spotlight, I think, and most of us have been focused more on the actual underlying trading of Bitcoin, how it's working at the CME and some of the other futures markets.
Okay. Given, Kathy and Jan, I'm going to ask you, and Ophelia, you can weigh in. Given how many applicants there are, we have 13 of them out there, there's a lot of interest in the fee structure here. And some appear to be waiving fees for some time periods. Kathy, I'll start with you, maybe Jan. I don't know if you published your fee structure yet, but if you can explain sort of what you're going to be charging here for this, for Bitcoin ETFs.
Sure. The fee structure, and I'll preface it by saying we are not looking to maximize profitability with the spot ETF. We will do that more so with our actively managed ETFs, but we really believe this is an important moment for to help with the democratization of Bitcoin access, giving more people access. So that's our primary motive, to charge 25 basis points. And for the first $1 billion or first 6 months, free access.
Now, this changed, right? It was, I saw it was published was 80 basis points. You refiled it with now 25 basis points, is that right?
Yes. So originally we were just putting in there a marker. We didn't know what how the industry was going to fall out. But as we were evolving our thinking, we were saying, wait a minute, this is a special moment to make a statement that this is a public good, effectively, the equivalent of a financial superhighway, a global monetary system, a technology, as Ophelia was saying. And we just wanted to make sure that one of the things we communicated is we want you to feel like you can access this. So free for the first 6 months or $1 billion in AUM.
So if I'm just a retail investor, I put $10,000 in your Bitcoin ETF, there's no fee for the first 6 months, is that right?
Or until AUM hits $1 billion, whichever happens first.
Okay, fine. Jan, have you filed the fees?
Yeah, all the fees came out pretty much this morning, Bob, because they're all getting ready to basically list on Thursday.
Okay.
And so that's not been filtered out through all the news. I don't want to talk about the specifics of ours. What I will say, though, I agree with Kathy that, you know, really we're standing on the shoulders of giants. And there are a lot of developers that have worked for free to build the Bitcoin network and continue to add, you know, to make changes to that network. And that we wanted to pay respect to those developers. So we're giving part of our profits that we're making off of this ETF.
But you did publish your numbers this morning, right?
We did.
Yeah.
Yeah, it's out there. It's out there.
And you don't want to tell us what it is?
No, but you know, Doug's compliance people are making me really nervous.
Oh, brother, for crying out loud. But you think it will start trading on Thursday?
VanEck products are competitively priced and very well built.
You're reading like an advertisement. But you believe it's going to start trading Thursday?
Yeah.
Okay. Kathy and Jan, there are a lot of reports out there that some applicants of the 13 have lined up substantial investors. You want to give us any ideas? Any investors lined up? Anybody want to say anything? Some people have been public about it.
The seed capital was disclosed in a lot of the S1s that were filed this morning. You know, I don't want to talk about our product too much, but we have very good seed capital coming into this.
Kathy, Ophelia, anything?
Yeah, I don't think seed capital will be an issue, Bob. And I agree with what Jan said at the beginning, where, you know, for a lot of our clients, they have to now do a little more due diligence as these ETFs come out and they see the S1s and so forth. So we think it's going to be there'll be a nice push early on and then a good nice institutional build.
Well, you heard
I
it's
can't
going to
go
be.
without, saying one of the things that is going to end up being incredibly important in the coming weeks and months as people start to actually do diligence on these products and try to begin adding them to portfolios and hopefully live up to these expectations around AUM. It's going to end up coming down to how well built are these products? How well structured are these products? Can they actually hold up to this? We've been running products like these for about 5 years. They are a little different in a bunch of different ways. Safety, security, operational infrastructure, it just fundamentally looks different. And I think one of the things that's going to be very interesting over the coming weeks and months is how that ends up translating with these audiences and with investors as they begin to actually come into the space for the first time and really understand the full range of that complexity.
Well, there's certainly a lot of product out there, 13 of them. Is it your opinion, the consensus is they'll approve all of them at once? Is that a fair?
Yes, well, we have precedent. That's what happened with Ethereum futures ETFs. They were all approved to launch on the same day. And I think the SEC, at a high level, policy-wise, doesn't want to advantage any particular ETF issuer. So I think this is a fair way of dealing with that. I don't think this is going to be a winner-take-all market, by the way. I think market share will be distributed. There'll be a lot of winners. And that's fine. That's great.
Yeah. Well, it is going to be an interesting week, folks. You heard the anticipation is building. It looks like something's going to happen. 13 of them will be here, of course, reporting on all of that.